The only thing I'm certain of right now is Liberation Day liberated us from not having volatile markets. Because ever since the president announced all these tariffs on the remainder of the world, the markets have been in complete state of flux. I mean, what do we have? A couple thousand points down, 2 days in a row, then choppy markets, and then all of a sudden put a moratorium on them for 90 days. The next thing you know, markets up 9% or something. Listen, I've been doing this a little bit longer, I think a couple years longer than you have, Sam, as is evidenced by my white hair. And I've never seen this type of volatility. So if I haven't seen it, you guys certainly haven't. What could or should we be telling clients and other potential investors? How should they be reacting during this time of, obscene volatility?
Well, I think a big part of it is the personal nature of why you are investing and what the purpose is of each bucket of money, and tying that to the timeline and horizon, because you mentioned it. A lot of it was unpredictable, and you need to be positioned for those timelines and what the purpose is of these buckets of money that you have, and tying that back into these unknowns. And if you're expecting money to be needed, maybe you shorten your horizon and change the investment allocation off that. But I think a big thing is that you should be invested for the unknown rather than trying to predict what's the unknown.
I think that's a great piece of advice. And Chris, we've seen the stock market fluctuate a lot. That's going to get all the headlines, but the bond market's been upside down as well. So what do you tell people when nothing seems to work?
Yeah, well, President Trump just actually announced that he kind of just changed his opinion of the 90-day delay based on the bond market. Apparently, the bond market speaks louder than the equity markets. The bond market's just math, really. And so when the bond market's screaming something's broken, something might actually be broken. So we're listening to the bond market more than the equity markets right now.
Yeah, and I think, we should. I started off in the industry years ago, Ryan, some decades ago, in the bond market, and I would tell you interest rates really do sort of set the tone for everything else. However, when we see interest rates behave so weirdly, like we have the last several days, and knowing that you pay particular interest to the short part of the yield curve, what do you think the Federal Reserve is doing during all this? Are they paying any attention to this market volatility?
I think they actually have to, pay some attention to the market volatility. The Federal Reserve Chairman Jerome Powell has talked a little bit about the inflationary pressures that tariffs might bring. And I think that's something that they absolutely need to look at when looking at how many rate cuts they'd like to make this year.
Yeah, well, I got to tell you, with everything that's going on with tariffs, market volatilities, questions about the Fed, I think the best thing we can maybe tell all of our clients and prospects is investing's a marathon and not a sprint. And if you're standing out there on the ledge, get back on inside. It's going to be fine no matter what we do today. The sun's going to come up in the east tomorrow.
Yep.
So, guys, I got to tell you, it hasn't been a lot of fun, but I'm looking forward to a good remainder of the year.
Us too.
All right.